Well, hi, Vinny. Thank you for making the time again. I think it's number three, maybe even number four on my podcast.
But Happy New Year. We haven't done one in 24, so it's number one.
Exactly. It's number one in 24, season 7.
Your word.
Exactly. No, it's always good to talk to you. And for my audience, the reason why Vinny has been featured, maybe more than everyone else on my podcast is because of his broad view on the SaaS market. He's been a veteran in this space, like I possibly myself, just with a different background. And it's always fun to talk about what we see and what the trends are. So this is a little bit of a different format. And we recently connected again and said, okay, well, what do you see coming for 2024? And we both have our views on that. So we thought it was going to be a good one to share that with all of you and get a bit of a debate going about what's real. Anything to add to that, Vinny?
No, it's, I tend to be a little over optimistic, and you tend to be more rational. So it'll be good to present both points of view.
Yeah, no, I mean, people always call me optimistic as well. I mean, at least that's I try to shine a sun on the world here from my little town in Spain, and not a pessimistic guy at all. But I do see, of course, I mean, there's reality going on. If you look at, I mean, I've interviewed approximately 55 SaaS CEOs last year on my podcast, running a weekly mastermind with SaaS CEOs. So I hear kind of the vibe every single week. I write about it every day. So you pick up on things that, of course, are reality. And one of the things, there's a couple of things that I started to see as a reality for 2024. And on a very high level is three things. We're entering an era of creating what I call funding freedom, and I'll explore that in a minute. The other thing is, and that's very much related to that, it's very important to start measuring and watching unit metrics, maybe more than ever. But there's a couple of them that I find specifically important, and I'll explain why in a minute as well. And then the last one, which is also a topic that I've got a passion for. I'm actually writing a book about it. Hence the topic and bringing it up. It's about building a resilience muscle. Possibly also more than any time else in history. I mean, we've seen the last couple of years, crisis after crisis, kind of being thrown upon us, and that, of course, has its impact. And I think that's if you prepare well for the three things that I've just mentioned, you'll come through 2024 better than you got in. So that's what I wanted to talk about. Anything to add to that right now?
No. I think the last point, the resilient point, in 22, we haven't talked in a couple of years almost, but in 22, I helped 2 SAP C-level executives write a book. And it was based on the fact that we've had, at least back then, we had COVID, we had the Ukraine crisis, we had climate change urgency increase, and we've had massive digital transformations. So the book that we wrote was Business as Unusual, and it focused on how every industry has changed as a result of one of the four, quite often all four impacts. So the point of resilience, absolutely, not just resilience, it's flexibility is clearly very, very important. So
yeah, exactly. And what I see at the end,
what I saw, you can be like, okay, I understand resilience. I saw so many opportunities, and I'll talk about it, when we go through my slides, but it's incredible if you're a startup or even an established company, how many edge applications have become viable, how many global markets are becoming viable. And unfortunately, I think sometimes we stick to what we're comfortable with. So we speak to English-speaking countries, and we focus on the back office and so on, but there's so much opportunity. So that's where my optimism comes in.
No, I mean, I definitely see that, and I think that's where we can pinch into each other. But it's about looking at it with a different pair of eyes, because I see the opportunity as well. What I also see is that last year, but well, at the end, 2022, 2021 were of course years where money was still freely available, and it's not available anymore. I mean, yesterday I ran a CEO mastermind, and the hot seat, the person that took the hot seat, CEO from a platform company in Germany, came with the debate: should I fund or should I not? At the end, he got clarity based on all kind of evidence on his own business. He didn't see it as clear as he saw after that. Was that he shouldn't go for funding because the conditions are just not there anymore. The expectations are way high, and what everybody is looking for the investment world is like to minimize the risks that are there. So what they expect is that there's predictability in what you do. You have proven what you're doing. So I mean, you have to kind of prove that whole thing all by itself anyway. So that sort of requires a different mindset when you start a business or when you start growing the business again, about growing a business that is going to be there for the long term. So you build it for efficiency, you build it for profitability, so that the main source of funding that you get in there is just customer revenue and customers that actually stay. So that is the area that I think 2024 is going to be known for. Companies that design the company in such a way that they create funding freedom. And then when they need funding at every point in time.
I really like that because, my view has always been customer revenue is mother's milk. If you can get that, you build strong companies, right? Too many startups go for funding way too early or become dependent on funding. And investors are a lot more fickle. They're a lot more demanding than customers. Customers, of course, demanding, but investors are a lot more demanding. And so, learning to have customer revenue as your primary source of funding is always healthy.
Yeah, exactly. Yeah, what it should create is at the end an option. I like to have options. I think everybody likes to have options. But if funding becomes desperation, because you need it in order to make the runway, in order to make that investment or to scale as fast as you could possibly can. Because what I also see, and that's coming through in a number of the podcasts that I've done with SaaS CEOs, some of them are really in a race. It's time bound how big the opportunity is and how they can grab the market share. And of course, that's where
I had an interesting conversation yesterday with somebody who's written about moving from product engineering to market, what he calls market engineering. And he was saying, you have X number of points in that journey. And quite often the VCs define how much time you get in each, right? To go from minimum viable product to traction to revenue goals and all that. Yeah. It's artificial, he said, but it's driven by investors. So, customers just want you to be viable. They don't push you to, hey, you need to be at 6 million in 18 months, right?
I couldn't care less. Exactly. And I've always said, and it's also, I think, one of the lines that is highlighted a couple of times in my first book that I released in 2020. I applaud for those founders that measure their success by the impact they help their customers create. And that's also why my book is called The Remarkable Effect, because if you do that in the right way, the value will come your way, likely in amounts that you cannot even forecast for. It might not be, like some things might go faster, others go maybe a little bit slower, but at the end, it's a super healthy way of doing business. Because you take the customer value up front, and that's how you organize the business around it.
Well, getting into my slides a little too early, but because I spend so much time with customers, I'm hearing so many unfilled expectations, right? Gaps in their view of what vendors should be delivering. Coming out of the, like I said, business as usual, we found so many examples of edge applications. If you're in retail, every retailer wants intelligent returns as a process, right? You don't want a store associate making a decision on, hey, should I take this return? Should I restock it? What should I do with it, right? It should all be an automated process. Okay, that's an application. Amazon has shown it can be done. You just take it back to a UPS store or Whole Foods, and it just happens. Reverse logistics happen, right? That is the creation of consumers. Most retailers are nowhere near that, and they don't want to build it themselves. But when they go looking for it in the market, they don't find too many options. That's one. Telemedicine in healthcare, right? I mean, there are many more choices now, but 5 years ago, when COVID first hit, or 4 years ago when COVID first hit, it was like they couldn't find any viable solutions, right? So we found 100 different utilities are looking for EV battery charging, billing, and roaming, and all that, right? 5 years ago, they didn't care. Today, every utility wants that. They can't find too many options, right? So there's plenty of look at geographies, right? Multinationals are moving around their country portfolio like I've never seen before. They want to hear, what do you have in Kenya? What do you have for Indonesia and all that? Most vendors, it's too expensive to new market, and like, I don't need excuses. What do you have today, right? So I think the plenty of opportunities.
Yeah, no, that's exactly what and that's also why you're talking about negative or maybe a little bit more cautious, but to create that opportunity to create funding freedom is actually, if you have an eye for that and your mindset is around that, then you start to see those opportunities, and you can create, because you got you build your business for the funding freedom, meaning there's profit, there is enough cash to reinvest into the business, into those opportunities, and then it's then you can, and that goes into the resilience part, taking it up and build product for it. I'm talking about. Go ahead.
Investors sometimes tend to be fashion driven, right? So quite often, what are you doing in Indonesia? Well, they don't. They follow something that is predictable, what their colleagues are telling them, right? So you don't often get the best advice by just listening to investors. You got to go to the edge of the enterprise. You got to go to the remote parts of the world sometimes to find opportunities.
Yeah, and I mean that's the thing I wanted to say something about. The opportunities. If you just I mean, the way I write also. I mean, I write seven reflections on SaaS per day, per week, but my list of topics is growing by 20. And I mean, if you're curious, and that's trait number 4 in my book, and you build it as a muscle, you start to see those opportunities. And then it's a matter of, okay, like every quarter or so, go with your team, go through those opportunities. What are the pain points that we've seen? Which one are gaining in value to solve? Which one are getting in criticality to solve? And where can we as a team and make a meaningful difference and create differentiation? And once those 3 criteria, once you start to multiply themselves and you get above the 500 points, so for example, you're on a scale of 1 to 10, value is a 9, criticality is a 9, and your ability to make a difference is an 8, you end up with a large number. And that's pretty good sign to start going into the directions where the opportunity really is. But there's indeed, I mean, I come from the ERP world, and you've been an ERP analyst in the past. I can vividly remember those conversations about supporting countries, because it's a choice, and it's easy to say, okay, we're going to support the UK, and
part of the problem with the ERP vendors is it's a direct sales model and partner model, and when you decide to go on a new country, you're looking at $5 million to enter a market, right? I'm finding indirect channels are much healthier.
Interesting.
To go into new markets, to at least validate a new market. And the big vendors just are not equipped to do that. So
well, ecosystem is definitely underrated. I've had various discussions with the customers that I have on creating ecosystems. And it's finding that win-win.
Or even web-based selling, right? I mean, in the SaaS model, you should be able to do a lot more web-based selling, and yet in the enterprise world, we still have big teams selling those. So it's difficult to take that model and take it into a new global market and say, this is my pricing because my costs are so high. They don't care. They're like, this is what our competition is providing me. You need to match that. So, I mean, that's a big change that, we need, as an industry, we need to go through.
Exactly. Yeah, that's right. It's so odd to hear, even in today's age, 2024, how many companies are still out there in the vendor world that are just getting used to, it's cloud these days, and even worse for customers that they have. So yeah. Well, I mean, let me switch from the funding freedom to a couple of the unique metrics that I particularly start to come, in favor of. I mean, everybody's always, of course, talking about gross margin and how important that is. One that I have started to value a lot is what I call ARR per employee, and I'll tell you why. That metric for me, has always been underrated as well. I mean, so many conversations that I have with SaaS founders is when you ask about how they're doing with the company, the first thing they say is, "Oh, we've grown to 100 people, so we're doing fine." Well, the question, I couldn't make up that number. I mean, I can't say anything about whether your company is doing with 100 people. What I do know is that likely you got the how you measure success situated in the wrong way. And what I like about ARR per employee is that's about leverage. And I've seen fantastic cases of very large companies and very small companies that have an ARR of 400,000, 500,000. I've seen even ones that have 1 million ARR per employee and doing fantastic. Once you get that, it tells a lot about, the health of your company all over the place. Its profit is good, churn is not an issue, net revenue retention is likely very good. All of these things just add up. I think it's a fantastic measure that a lot of people don't dare to look at possibly.
I completely agree, because customers, really well-run customers, focus on employee productivity, right? Which is yours is a little more ARR focused.
Yeah.
But you look at Amazon, for example. If you go into the distribution centers, they reinvented the whole concept. I mean, they didn't go to Oracle and say, "Give me a warehouse management solution in the cloud." They completely redefined the process where work comes to the worker rather than the worker walk around, right? So these are huge warehouses, and the employee just stays there, and robots bring them the stuff, conveyor belts take the stuff, there are miles of conveyor belts and all that. So when you look at the automation, they probably run these distribution centers with 3,000 or 4,000 employees. If they didn't have all that automation, it'd be 30 to 40,000.
Yeah,
right?
true.
So you look at the productivity of that technology and you go, no brainer, right? So what you're saying is same thing. ARR plus employee per employee is a measure of productivity. Are you being productive in your
Yes
use
and no. Yes and no. I think it's more. It's more. I mean, I like your. I mean, I see your example around the efficiency and the fact that it's about the cost side. But what I also see, and typically with today's day and age around what AI can do for you, generative AI. I actually am more fond of the IA model these days, and this also have come through my podcast for the last couple of years now. The intelligence augmentation. That's a fantastic opportunity to enable people to not only do more, but also make a bigger impact. And that bigger impact is translated into value. So you can start to charge more and still have customers say it's a no-brainer. That's an enormous opportunity.
Oh, it is. It's one of the points I want to make about, how what I'm seeing in Gen AI. Again, to your point, ERP vendors are still talking about HR use cases and procurement use cases. I'm seeing operational use cases, and I'm seeing revenue side use cases, right? As I tell vendors, don't just look at SG&A, look at the cost of goods sold, which is very unique by each industry. But even more important, look at the whole P&L. Why isn't technology affecting revenue side? Why isn't it affecting the whole P&L, right? why is it not affecting the depreciation? You should be looking at assets, right? So we tend to be a little myopic coming from our backgrounds, and it's time to open it up.
Exactly. Yeah, that's true. And that's we're just touching the tip of the iceberg there with what is possible. And for me, yeah, I mean, that metric ARR per employee is really about creating value that people are prepared to pay a premium for. And these are, yeah, for every company, you're looking for those type of use cases, because that's where you can create the leverage that you need in order to sustain. Create the resort, well, the freedom to invest in the things that need to be done. So it becomes a flywheel. It becomes, if you do it well, it becomes unstoppable. Hence my first point about funding freedom. Still is a couple of things, of course, and I mean, I've heard so many things, so many discussions also on LinkedIn this year about product market fit. And for me, that's a lot of founders are spending so much time and effort to find that product market fit, whether you are a startup or scale up, because it's always, everybody is creating new products, and at some point they need to fit. But in the current market, I think it's also I wrote about it in my first book. Your half-life of the product, that's shrinking so rapidly, and that's where resilience comes in at the end. Product market fit is, can be very good today, but can be completely gone tomorrow because of the fact that your customers' expectations have suddenly shifted. Something is happening in the world that is having a big impact on, what you do.
You mentioned I was an ERP analyst. I'm very disillusioned by the analyst market because their definitions don't evolve quickly, right?
Yeah.
So they're still doing magic quadrants and waves based on a definition of ERP that you and I grew up with in the 1990s, right?
Yeah, true.
I mean, the whole enterprise has grown so much since then. There's a lot more focus on asset-intensive processes, a lot more focus on, or even CRM. CRM hasn't evolved. We still talk in terms of marketing and sales and customer service, right? Three big things. When in fact it's about ecosystems, it's about indirect channels, and so to your point, we are in some ways, for a technology business, we need to be dynamic and so on, and we're stuck in a lot of old paradigms.
That's true. But the question is, I mean, how does that happen? Like, why is it that things get stuck? Is that I mean, in my first book I talked about complacency, and I still think that is a disease that a lot of companies are suffering from. Is there more?
It is, Wall Street rewards revenue when it should reward what I call new revenue, right? There's a company called 3M, big consumer good and chemical company. They, for a long time, have looked at revenue from new products. Right?
Yeah.
The definition of a new product is something that was introduced in the last 5 years, which is already too long, but at least they do that. And at the corporate board level, they have a metric that measures 30% of our revenue came from new products. Okay. And they introduce literally hundreds of products a year. So it's driven from that top level goal all the way down to each product area.
Yeah.
In technology, we don't care where the revenue comes from. Wall Street is happy with our revenue. It could be from on-premise customers who are, 50 years old. They don't care. So it's partly Wall Street is not demanding enough of new revenue, and we're not ourselves not demanding of that. So I mean that comes from the top.
Yeah, and I think this is the same dilemma. There's the outside world. What is the main source of the funding of your company drives what you optimize for. I can remember when Unit 4 IPO'd in '98. Company was revenue driven in the first place, and then suddenly became quarterly driven by EBITDA, because that's what shareholders like. And that is a very short-term thing, because if you don't improve your EBITDA next quarter, stock will go down. That has, of course, big penalties. I see the same thing with VCs. And they push you for their metrics rather than like what's important to you. And they don't care whether you will fail or another will fail in their portfolio, because they know at some point one in them will become a unicorn and it will pay for everything. So
Well,
unhealthy.
in fairness, they want your company to be healthy, right? So Wall Street likes revenue because it overall then drives how much you can spend on different things. I mean, I'm not completely criticizing Wall Street. I just want Wall Street to become much more demanding. Don't just look at a top line number and say, show me how much of this is on-prem, how much of it is cloud, how much of get more sophisticated about revenue analysis, right? Because if they start to do that, show me your global breakout, show me your vertical breakout and all that, then they can say, I want to see more in this area. Then they'll drive companies to do that. See, right now they're very happy with just the simple metrics. They should be looking at your metrics, right? Some more sophisticated, what VCs do, they move to a new paradigm in terms of metrics they use. Wall Street's still very happy with revenue and cost of sales and so on. It's still at a very high level.
It is. And of course, then there comes companies there are so many companies that are not IPO'd and have nothing to do with Wall Street. But still, I mean, talking about bringing it back to the resilience muscle, or the resilience importance, there's so much. I mean, I like I said in the beginning of this call, I see like four. No, I'm not sure even whether I talked about it. I see four like angles of volatility in the market. But the resilience is important. There's volatile markets. That has to do, of course, with like, how will the economy improve or decline again. Then I see that companies have to deal with the ever-changing commercial conditions, which has to do with how do your customers move around. I've seen a big move this year, last year, that for many of my customers, their prime decision maker changed, where they would, for example, first of all sell to the CIO or to a COO. Now the prime decision maker has become the CFO, because it's about these big investments, and we have to watch the money. The unexpected competitive pressure we talked about as well. There's you mentioned the new sort of vertical markets that have come up, the combinations of combining products and that create new value. The fact that development of product in the first place is just increasingly easy, and between air quotes, that's just driving competitive pressure up. I mean, just look at the announcements of how many companies out there have introduced one way of or the other something around ChatGPT. I mean, I'm not sure whether it's valuable or not, but it's creating a whole shift in innovation opportunities, noise, and you just have to fight it. That's where resilience is an incredibly important muscle to build. That's what I'm high on. So how do you see that?
Well, so let me if you could share my slides, let me walk you through a few opportunities that I see, and then you can challenge me on some of them.
Exactly. Let me see.
So broadly, I see four big mega opportunities. Okay. There's too much glib talk about, hey, we are deglobalizing. Germany is deindustrializing. We're going to de-dollarize the world. The US is dead. I mean, there's so much of that commentary going on. Let me walk you through and what I'm seeing. We're seeing a reglobalization that completely reset in terms of global powers and so on.
Yeah.
The second thing I think is industries. It's been my passion of mine for a while. I've never seen industries change so much as they have in the last 5 years, because of COVID, because of energy pressures, because of climate change urgency and digital transformation. And I'll go through that. obviously the whole Gen AI, but broad automation, opportunities. I don't think we're looking at it big enough in terms of the whole enterprise. We're still sticking to our functional silos and so on. But we'll go into some of that. And then one thing, Don, this is something a customer about 4 months ago slapped me in the face, and he said, Vinny, you are so focused on the top three. It's about new markets for you. So there is right before our eyes, 50% of ECC customers in SAP world have not moved to S4. Probably 80% of Oracle, JD Edwards, and Siebel and PeopleSoft haven't moved over to their products, right? Something is wrong with the industry.
Yeah.
Same thing with Unit4, same thing with IFS. The amount of people stuck in old versions is incredibly high. So, you and I as analysts need to be telling people something is wrong, guys. We need to look at why people are not moving over. Because that's actually pretty easy money if you can move them over, right?
It is.
But it's not happening.
It's
the pain of moving to the new product is so much greater than the pleasure that it's not happening.
And that should be the other way around, of course. And a lot of vendors, and that's what I see, of course, also on a day-to-day basis, they think that people get excited by the fact that there's all this new technology in there. And customers couldn't care less about that.
Well,
yes, but
do.
now it supports ChatGPT.
The end users do, but when you go to the CFO and CIO, they go, show me the cost, show me the payback, show me the risk, right? And that's where the answers are usually much more difficult.
Yeah, that's why it's important. And going back to the previous example, that you look at what the outcome needs to be, because to get someone to move from what they have to something new, whether that is your own application or even a competitive application, it needs to be multiple X better in order to make up for all the risk and the effort and so on that is going to be there anyway. And otherwise, I wouldn't do it either.
I mean, in our lives, we see it. I bought a new hybrid 6 months ago, and in 5 years, it's amazing how much cars have evolved, right? That is a rate of change in most companies. So why are we surprised that customers expect dramatically better stuff?
Yeah, of course. That's what we grow up with. We see it improve all the time.
Oh, we see that in our iPhones. We see that in most things, right? And
honestly, on the iPhone case, I've always been an Apple addict, but not sure whether 15 and 14 and 13 are that revolutionary. But anyway, that's a completely different thing.
I mean, look, we're not talking about 15. We're saying go from version 1 to version 2, and we can't even do that in the enterprise.
True, exactly. Yeah. So how do we sum this up? I think there's for me, it's like there's a lot of opportunities. You just have to approach it with a different mindset.
I think you made some great points in terms of, how do we look at new metrics? How do we look at approach new funding sources, right? And my optimism is around, guys, there's plenty of opportunity, plenty. And if we don't do it as an industry, customers are going to build it themselves. New vendors will emerge from the emerging markets, right?
Yeah.
Those opportunities aren't going to just sit around. So
yeah, it's fascinating indeed how close the development tools have come to the end user level. I mean, the whole revolution of the no code, low code platforms, where the business can be in charge rather than IT. And if IT doesn't do it, the business will do it. I mean, I recently did a project for a company in the CPQ space, similar thing. The majority of their competitors can do a lot of things for customers, but it has to be done by their developers, meaning you're dependent. What they've done smartly, yeah.
As much, I've seen how Zoho has been growing, right?
Yeah.
I've been to their Chennai facilities, and just the energy level there is. I cannot see don't see that in Waldorf. I don't see that in Silicon Valley and so on. And you go, why do I not think it's going to happen in other markets around the world? You know, why do I? It's going to happen in Nigeria soon. It's going to happen in UAE soon, Kenya soon. So there are competitors coming that we have never thought about, right?
Yeah, exactly. That's
if we don't do it if Western companies don't do it, those markets aren't going to wait for us.
Yeah, and they are possibly better. Yeah, how do you say that? Utilized because they have the cost is lower in the first place, and they just made the move. Yeah, in one go rather than then gradually, incrementally growing into those other new tools.
It's called leapfrog, right? I
Yeah.
mean, you've seen that. We saw that in telecom, where if you went to India, or most developing countries will tell you, growing up, most immigrants will tell you, we got our first phone when I was 12, right? First landline phone.
Yeah.
Now everybody in most of the developing world has their own mobile phone, right?
Exactly.
They skip landlines.
Yeah.
And moved to, it was a leapfrog to you see that in mobility, right? The West went through a horse buggy and a slow rail and so on, and the developing world is going with aviation and fast trains and so on, right? So
exactly.
Something similar is going to happen in software if you
just a matter of time. Exactly. Yeah. I think that's a nice way to close it off. I realize we are already exactly 1 hour on the call. That goes by if you look at trends. Fascinating, and let's keep an eye on this to see whether what 24 will really turn out into. Thanks for being on the call again.
I'm a hopeless optimist, so I need some slapping around to say, hey, Vinny, like the fourth point I had to make. Somebody had to slap me and say, well, you're not looking. Why are people not moving? So
yeah, true.
I would welcome more slapping around from your listeners.
That's a good one. And I think everybody listening should have those people around them to slap them, because complacency is a disease that is hard to recognize, and it's easily there. Thank you.
Don, Happy New Year. Have a great year. Let's not wait 2 years this next time.
Exactly. Let's do one in 2025 again.
Thank you.